Lancaster Pollard, as many people know, has been doing a lot of financing in seniors housing and care, and they have just formed very recently a new company, Lancaster Pollard Finance, which is going to be doing balance sheet financing, which they haven't done. I'm here with Doug Korey. He is the president of the new company, and so we're going to talk about financing. So you've been lending to this industry for a long time. Now you are basically president of a balance sheet lender. What are your plans for this?
You know, it's an interesting time in the cycle of the overall industry. We've been through how many together, and I think it's a terrific opportunity to bring this type of capital of leverage financing the small and mid-sized market, utilizing Lancaster Pollard's very unique origination platform. I think it's still underutilized today in terms of the types of products. We see a lot of equity, we see a lot of cheap bank debt, but we just don't see the in-between size, particularly for the small mid-size. So we plan to grow this in a very controlled but large scale over the next several years.
Yeah, how much do you think, on an annual basis, how much do you think you can grow it?
I think easily a couple $100 million a year, to a sizable platform that competes just without anybody in the market today from a lending perspective.
And all balance sheet, that you keep it on the balance sheet?
For the most part. I mean, where there's opportunities to sell off some made pieces in senior capital, because I think there's a considerable number of buyers for that type of product, we'll do that. So, we're really in the market, and have an expertise in holding leverage, managing leverage in mezzanine, preferred equity, and in the types of products that aren't as readily financed across the board. Skilled nursing in particular, I think is underutilized today, underserved. Acute assisted, anything that has a true healthcare expertise needed almost from an investment banker perspective and operator perspective, all in one, could certainly use this type of walk through a facility, understand it in order to put this type of capital to work.
Now, Lancaster's been very active in the HUD market and the Fannie Freddie, tax-exempt bonds. So you're coming in as a balance sheet lender. Are you almost going to be competing against your new colleagues at Lancaster Pollard?
No, in fact, we took some time to walk through this opportunity together. And I came away with the fact that the bankers were already doing this type of structure in a lot of regards. They treat each client individually through their full cycle of growth. And so agency certainly was the product that they are so well known for. But whenever there was a capital product that they needed, the banker would try and arrange that type of financing and did quite a bit of this. In fact, the finance company is, although it's relatively new to the market in terms of name, it's been going on for about a year now, and they've done a few bridge financings that have been, I think, fairly creative. And so I'm here to raise that level of structure in terms of scope and types of products, but the bankers have already have a real head start on this.
And is the focus going to be, across the spectrum, SNFs, AL, IL, acquisition, refi, development financing, everything?
Yes.
Anything you think you might, or you see the greatest need?
Again, I think the acute side, or more acuity side, I think has more of a need. I think the skilled side for sure. Probably Lancaster Pollard has financed, in terms of an overall portfolio, has financed more skilled, but is I think very well balanced between assisted living, memory care, and skilled, and IL to the extent that we're part of a campus perspective.
And now as a balance sheet lender, towards your risk, any concern about where values are going in the market with cap rates continuing to compress? And I heard today that a lot of people are expecting another 25, 50 basis point drop in 2015 in cap rates.
I think we always have a concern over value, but we're in this type of cycle. But I think we're more about creation of value. So we're not going to get into other than on our true bridge and agency products. Any sort of refinancing activity of something that's attaining full value or close to full value, so not to take interest rate risk and cap rate compression. Where we will excel and continue to excel is in value creation, construction, and turnaround financing, substantial renovation. Things where operators actually have to put in some money to work and put their expertise to work. I would expect that all of our products will get refinanced out as opposed to needing a sale. And I think it'll feed directly into our agency and exit expertise quite nicely. In fact, we've already closed since I've gotten here, and there are loans going directly into the agencies from customers who have never done business with Lancaster Pollard, but the fact that this product now is drawing them to the platform.
Right. And what about on the development side? Because as a balance sheet lender, you can do construction financing, and I assume you will be doing some.
I think it'll be a good sized component of what we do.
And are you concerned about the uptick in development, really in the assisted living memory care side of the business?
There are some markets we're concerned about, but I think overall, from the small to mid-sized operator's perspective, there are many markets that are still dating back to the 90s that haven't been touched in a substantial way. So I think that there's still a lot of opportunity out there. Skilled certainly has a lot of upside for redevelopment, replacement facilities, new facilities in many states that we're still seeing a very aged component. So, we're going to be selective in the major metros that have seen a tad of overbuilding or approaching that.
How about on the skilled side? I would think, now that you, as a balance sheet lender, with the old, I'm sure you've got clients that are 30, 40-year-old nursing homes. So you put in $2, $3, $4 million, if it's in a good market, of complete renovation capital that you do on the balance sheet, and then once everything is kind of settled down, then your HUD guys can take it out with HUD. I mean, I would think that would be in the plan.
It's a perfect opportunity for our bankers. I mean, they get to touch the client through the entire cycle capital process, from that initial creation of the value through to the exit. And I think that that's exactly what the customer wants. They want the expertise. They want people to take risk with them. And I think that's what our specialty is.
Well, I know you know risk because you've done a lot of high leverage mezzanine financing in your previous life. So you are over those years, you're very comfortable with that risk.
Very
and
comfortable.
you know how to measure it and how to price it.
That's right. And I think that for operators today, they have a choice of taking on fairly, although less expensive today than years ago, but still very dilutive equity from the outside, particularly in the small and mid-sized groups who don't have large private equity firms chasing them, or traditional refinancing coming in. If you want to own a facility, the stack structure of using mezzanine and preferred is really a preferable way for many owners to obtain that. But then within 3 to 4 years, refinance through an agency. If you look at your long-term hold, that's a very cheap form of equity.
Yeah. Well, good luck. I'm sure you're going to have, there's just so much going on, I'm sure you're going to have one hell of a busy 2015.
We're really excited, Steve. Thanks.
All right, good. Nice chatting.